Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 310th edition of Investdata Trading Academy Live with Ambrose. Yes, market across the globe is on the downside this morning as a result of what the weekend report, trade report from China, and also the missed earnings that has hit the market so far, as most of this matured economy earnings season is rounding up. No, this week that has put the market in a pull down position right now. But the good thing is that the volatility in the market continue, even as we are seeing the market pulling down in matured economy. We are seeing some sectors and the individual stock in this market also looking up as a result of what continue portfolio repositioning and also sectorial rotation. These are what is causing this continuing oscillation we are seeing in this matured market. That means there's no cause for alarm for investors in the market at this moment. All you don't do that is you must understand why is the market in this kind of oscillation mode, and why is the market also waiting for more trigger to find direction. As we are seeing that events that are unfolding, we are seeing that the oil price are continuing to rise, and also all eyes are on inflation data, and we know impact of oil price going up in an environment, especially in the global economy, what's going to do toward inflation. Yes, we have seen recently inflation cooling down in this matured economy, but as we are seeing this, oil price hitting almost 86 to 87 before pulling back on China weak trade report. But I will tell you, this is what all eyes on this inflation data, and I will tell you that also going to decide where the market or kind of the direction market will go in. As we speak now, we are seeing that investors are paying attention to what they're paying attention to what we call the direction of these prices, because these prices will determine how far they are going to go in terms of influencing the performance of the company. And don't forget that it is the activities of the company that will impact the bottom line, which also will influence price. As we say that price feed on earnings. But despite what has happened, we have seen that the most of the sector also that release their number, as investors are continually digesting this number that came for half year to know exactly what they are, and that is why we are seeing volatility, because of what moving from one stock to the other. These are the things that is also influencing price, and this of volatility we are seeing in the market. For me, it's not a new thing. All that you need to understand. If you look at what is happening in Asia market right away as we speak now, Asia market also have open, as I said, in the down direction as a result of what this weak trade report that came from China, and that has changed the face of the market in that environment. And Japan is not left out, because the SoftBank result that came from that environment too was also in a bad position. The result is not looking good, and that's also the earnings. These earnings that are coming at this season also influencing this market across. But for me, like what we are seeing here, we have seen that in the market here, we have seen a missed numbers in terms of earnings that are hit the market, but also investors are trying to also reposition into the sectors where they see that it still has a future potential to grow their earnings, and this is what also will continue to impact price. And that is how to invest in any market, because once you see all these directions, it tells you where you should put your tent. And since every investment is again the future, you don't just follow the bandwagon. You know why you are not in a particular stock. These are the reasons why investors will continue also to reposition their portfolio in any market, just to make sure that they are in the right vehicle, or in the right company that has all it takes to move their earnings in the upper direction. And despite what is happening in Europe market, we saw, or Europe environment or zone, whatever you call it, we saw that yes, the Germany inflation data slowed down for the month of July, and this is also a signal. If for the month of July, that don't forget that this zone was hit much with what is happening in Ukraine and Russia, because it's the same zone. You can see that it has also that's why the oil rally to around this 87, 86. But we are seeing that July, the inflation on year to year has slowed down in this domain. For me, it's a good one, but nevertheless, all the indices, all the major market, indices in this environment in Eurozone are also in the red as to speak. They all drop towards the south. Like I will tell you that you must look at where the market is going as a trader investor, as you're opening your chart. Chart is also really reflecting that there is also a kind of wait and see, as also investor continue to analyze the data, the earnings that just hit recently. They've seen US job report, all eyes on what on US inflation data or what consumer prices, and also in that of China. But the trade report that came from China has changed investors' mood, and also that's also influencing global global equity generally. As we expect that global stock have some boost. If we see a positive inflation data from US already, we're seeing that other macroeconomic data that came from US is a sign of improvement, which is also a pointer if the Federal Reserve also will end what the aggressive rate hike. Like one of two of them in the committee have said that on the strength of data that's so far, they are all eyes on what on the inflation figure. If it comes that they are likely to extend a pause for a while to see how the economy go, but all eyes are still on what on this economy. That's why this month of July inflation data that we're looking to see both from Russia and from US, sorry, from US and from China will also determine what next to do. But I believe that the bond market in the US has also bounced back because of what? Because of the downgrade of the credit rating, and but now we're seeing that as it's going up, this does not spell good for the equity market anywhere in the world. When you see that the yield in the fixed income market or other instruments are going up, it doesn't tell much no good of about it. But I believe that as the investors are digesting these earnings has come to the market, and these earnings are good this period. And but despite that, we are seeing that these two major factors is what is affecting the equity market. Even here with all the earnings that we're seeing, even the missed number and the those one beat expectation, the one I would say that are surprising number, we have not seen much reaction. Yes, good that we're seeing equity is having some liquidity flow into it, but because that the rate of fund entering equity has slowed down a bit, because we've seen another alternative what in the fixed income market, just as a result of what the kind of rate hike that we have seen the last APC meeting, which also have reflected on the treasury bill instrument. That has what slowed down. But I tell you that all eyes are still on this July inflation data or report. After we have seen the inflation manager index that was released by Stanbic IBTC, we are looking to see inflation. That will tell you how far those in the fixed income market, especially in the treasury bill. I tell you that fixed income market, the bond market, sorry, is still having some bearish run, but that of treasury bill instrument is still having a kind of a bullish because of what the high yield of of 364 days, about almost 12.5. And the history of Nigeria, we have seen that instrument goes as high as around 14-15 percent in terms of yield or rate. That will I believe that government will not go down as 15 because of what cost of borrowing will be high, and also how also the fund already in the market will need fund to for the economy to to kind of blossom or kind of recover and increase in activities. But I believe that all eyes is still on inflation data, even down here, to see what look like to compare with what is happening in the treasury market. But I tell you, for bond market is still very rich, because any bond that you are seeing below 9%, we are seeing 10, we are seeing 12, and inflation already in the month of June it's around the 22.78. I will tell you, if now with what we're expecting for the month of July, we are expecting to see inflation around 23.4 or 5, according to analyst forecast. But I believe that it must cross what 23 this time. That also will tell you, no matter what you are earning in your fixed income market, inflation coming around there, above 23, I'll tell you, you are still scratching the walls. If I'm keeping my money for treasury for a whole year for 364 days, and in this market, if I'm playing with knowledge and also playing with taking calculated risk, I will tell you I can make 10% in a day, even 20% in a week, or 15% or 10% in a week. If I make 10% in a week, in a month, I know what I'm going to target. I'm keeping my money. But for those that are risk adverse, try and it's a good one. And also, if you want to diversify your portfolio and also rebalance your portfolio, fine, you can do all this. But I tell you that this is the time that you should know that you should invest with knowledge and take what calculated risk than keeping your money, because these are hard-earned money. Yes, you want to protect, because without capital, there's no money to play the market. Whether you are playing fixed income or playing equity market, you need capital, and that's why you must protect this your capital jealously. For going to equity bond market or treasury bill to balance your portfolio, it's not totally a bad one, but you must take what decision that at the end of the day, higher return, higher risk and higher return, you must balance it to show that you also understand what you are doing in the market. Like I mentioned earlier, that some of the earnings that have that hit this matured economy lately are not impressive. They were missed, and also for that, the market is also already reacting to these numbers. I mentioned oil price as I was explaining. Looking at what has happened in Asia and the and the Europe market. Already in US market, we are seeing that. The same trend is there. All the three indices in US are also in the southward movement this hour, just as a result of what factoring this result that comes so far. And despite that we have seen an impressive numbers all this while, I will tell you that the market has not reacted to these numbers in this matured economy. For example, second quarter earnings that almost coming and end in US. We have seen that no positive surprise have dominated in the market, but still prices of stocks have not reacted to what this positive earnings, and it's a result of what, because of one information or the other that is coming from here and there, market continue to oscillate. But don't forget that when there is positive information to push equity price and it is not moving, that means any negative information can pull it down. Now that in a matured market like US, we are seeing positive surprises in terms of earnings, but yet to move. And this, I tell you, the earnings that have that reached so far in US in the last 10 years, the earnings have performed above 10 years average. It tells you that this is a good number. But price of stock in that environment has also not moved, despite the earnings are beating expectation. And rather, we're seeing some company in that environment after posting a positive earnings, the present one, we're seeing their price going into the negative direction. Just because to tell you that this is the market sentiment that at times you'll be surprised and say, despite all these numbers, why is it that the earnings price are not moving? It tells you that in this environment or in this kind of situation, when you see such, you have to be very careful, because we have seen that there's tightening of monetary policy around the globe. See companies are posting a positive number. That means any small increase in yield just is happening in the market. Also, what's in there, we will see that it's going to affect the equity market. Like I just mentioned, just we saw that 10 years yield in US continue as to trade above 4%. That is also a danger, a dangerous thing, or kind of a negative perspective, or what we say a negative influence on equity market. But also with as there's also inflation also determine whether this will continue, because I said it earlier that as far as oil price have risen all this while, it comes to say that headline inflation we're going to see very soon will be higher. But it is a good news that we won't have seen from Germany. For me, is still also looking downward. That means if these environments are able to manage their inflation figure, or prices of the environment are started slowing down, that's why we are seeing inflation from. That would be a good thing. And if that trend continue, we must also see the global economy printing out, and also the central banks of the world will start slowing down with their rate hike. That would be a good news for the global economy. For me, it's a good one. There's no cause for alarm. But if you look up to Africa, okay, if you come to Africa, the same trend is also in Africa. But I'll tell you that what is happening in Russia and Ukraine, we are seeing also showing very obvious in Africa. That's also we are seeing that there's mixed market. While some market in Africa are still doing well, but because of this movement of coup here and there and uncertainties associated with the region, I think that there's a slowdown in some of this market. But our market is continuing to look up. But that's why also we here need also to invest with a calculated risk, and also with wisdom to watch what is happening, and also kind of thing we're taking. That's why I said in any market where you are, you must look at what is happening in the environment, either international or locally, so that it will form the kind of position you take, either for medium, short term, or long term. These are very, very important things that we should also have at the back of our mind anytime we are in the market, because it's very, very important. Don't be carried away with just the uptrend of any market alone. You must understand what is happening with that, within that environment, that also impacts, the market either negatively or positively, so that you factor it in your decision, so that you can stay ahead of the market. Like I always say that every investment is against the future, and if you have what will influence result positively or negatively, you also have to find a way of putting it into your decision, so that at the end of the day, you will be in a better position also to manage the risk. As we speak this morning now, coming down to our market, I will tell you the upgrade of Nigeria credit rating is a plus for the market, which I believe that even not immediately is a good sign that the economy is finding its feet gradually, And also, once this thing continue, I believe that now we have seen from S&P, it's possible before they will now see Moody also doing the same thing and Fed. If all those happen from them, it's a pointer that there's potential in the market, and that also improve perspective of the foreign investor to what is happening in the market. Even what is happening in Africa might not affect more because we are neighboring, kind of a neighboring country around us. But we need also to apply wisdom. For me, there's no cause for alarm at all. And also, we are seeing that yesterday we are seeing the Senate even rounding up their confirmation of the ministers. Like I said in this class on Monday, that once assignment police assigned to these ministers and they start hitting the ground to run by going to their ministries or their the sector where they are and bringing out policies, either policies for short and medium term. Once they start rolling out this policy, it also has the way of also influencing the market and the caliber of people that have been, we have seen at the screening, those technocrats and those that are politicians. We want to see the appointment, the policy that are assigned to them. If you see that, yes, we are seeing those that understand that technology, those that have practical experience are handling some good portfolio that will have influence on the economy. That will tell you what you're going to see. Going to that's why it is good. The portfolios are assigned to them now, so that it also guide us what to do in the market. Is very very important because policy statement, policy direction, whether monetary or physical, has impact on the economy and the companies where you and I is playing. We need to understand this, and also as investors continue to digest these earnings, especially the institutional investor that really will know that they bring the liquidity in terms of we call them smart money. Once they start, they are done with the analysis of these numbers and start coming back to the market, that will change the face of the market again. And I believe that is why we are seeing positioning and portfolio repositioning going on in different industry, different sector, and now stocks, and also some entering what we call defensive stocks. Some are targeting those value stock, while some are still playing in the low cap stock. They see competition, but I will tell you that the low cap stock are very volatile and risky, but it can create you wealth, in a short time if you are in the right time. We need to also apply this. Also, the news of the exit of GSK can see that continue to influence the price. But like I said in one of our group that you want to play this with caution. What I mean caution is that this one I have taken time to look at the numbers they release, and also as we speak now, nobody knows the price they want to exit the nation or want to exit the country. But you as an investor, if you are already in that kind of stock, I will say who your position. But if you want to jump at this price of almost 10 naira 75 kobo, you have to trade with caution. I mean, real caution. Why I say caution is that you don't know the price they are coming, and also don't know how long it's going to take them to round up because they have to go to SEC and approve it. That if you are jumping to trade, how long you need to wait is one thing. And also, we're looking at the book value of this company. Like I said, it's around 7 naira, 70, 75, 71 kobo. You need to also play with caution. Already it's at 10 naira, 75 kobo. Or are they going to exit at 20 naira? They're going to exit at 6 naira? Going to exit? Nobody know the price, but you have to play with caution so that you will not be hooked in this kind of position. It's very, very important. Yes, we are seeing some, like I said, local stock still rally, and because we see potential in some insurance stock and also in industry. For me, if you're insurance stocks that you see that the company is doing well, you don't need to panic. Whether you are for there for short term, medium term, and you are for short, hold your position because the more we see the numbers coming from this sector, we expect to see what a better earnings, and that also move their price up, especially if the company earnings is trending what in the up direction is very very key. Yeah, this morning we want to look at what is happening in the market life. We are seeing that yes, market yesterday was marginally up, and that trend has continued this morning. For me, it's a good one. But until we see a breakout of almost if you look at this point here and here, I tell you this is almost a double top. Another one is coming. Once the market will be able to break out this level, right, that will confirm a new trend. For me, it's a good one that we're seeing this kind of trend. You can see that the market is not only start trending, but trending and marginally going up. Once able to break out this trend, that will now confirm a new trend. But to speak now, market is doing 65,380.64. Market is up by 43.998 basic point, up by 0.1% in the green. For me, it's a good one right down that the market is already around the 1% in the green, which is also equally a good one. It tells you that market is already moving up in this direction. You need to understand this. Once you see the market, even though it is a trending, but we are seeing that buyers are becoming more, it's a clue that something's happening in the market. As we speak now, we're having a positive market breadth in this situation. Sustain gainers and just 6 losers. For me, it's a good news for the market at this hour. It depends what will happen between now and the market close. But I see that more portfolio shuffling is also going. People are moving from one stock to the other, looking at what number that I've released so far. Trying to move to one sector is very, very important. And I see that our market we're having a more inform investors and traders that are trading with knowledge, and this is how the market is. I see that market stability has come because people have been understand what is happening, and also they understand the environment even when we're seeing things changing in terms of fundamental. Is it for good? Is also even the trading environment is changing, also changing your strategy to suit what is happening, and this is how to go. And I'm good and happy for it that we're having a sophisticated investor, that the traders that understand the market. If you look at the top five losers, we're seeing the Tantalizer, leading the pack this morning, followed by Chance. Also seeing Japan Gold and Regency Insurance, and we're seeing the Police Microfinance also. These are the top five users. For me, I'm not surprised for all these penny stores that are in the red now. Profit taking is possible, and also, like I told you, possible the balancing, moving from where you see that the risk is high to where you have the good expectation that yes, earnings of this company can keep it on, and that is how to trade. I'm not surprised that market is in this position. That's why it seems a bit calm, but we're seeing activities improving in terms of seeing more buyers in the market than sellers, and also moving from one stock or the other. Is also a good news for the market. If you look at the top five gainers, we're looking at we're seeing me and Baker leading that pack, followed by GSK. These are healthcare companies. Me and Baker, healthcare, GSK, Chalarans. We're seeing TIP, and also MC Nichols. These are the five stocks that are leading the gainer chart as we speak. Then if you go to in terms of volume, we are seeing also that investor interest in Sterling Bank has continued. The volume we are seeing, they tell that something is happening in that bank, and also this bank, we're here to see their first quarter and their half year result, and if they're going to supply the market, it's also a clue. And don't forget that since they become a kind of what's it called, a holding company, we are yet to see their number. Yes, they have paid their dividend for 2022, but we want to see the Q1 and Q2 where they are going with their new world, with the new structure. This also will be a good thing that investors are looking at, being a financial service provider, banking sector, with both interest free license and also commercial license. What is the benefit? And also this is a bank that has a good capital market background. People are looking at all this playing out what in the company, in this financial giant or financial institution, or that also have a way of also impacting them positively. I believe that this is also going to influence the numbers we expect. That's why we have to exercise patience to see. But I think more activities there. As we speak now, we have a 41.9 million share traded so far, and then the stock followed by Guinea Insurance. Guinea Insurance is just 9.2 million share traded. FCMB is already trading around the 6 naira 20 kobo, 6.8 million share traded so far. We're also in the GSK also 6.5 million share traded so far, and the chance is not left behind. Chance is already been around the 98, 92 kobo. I'm seeing chance now. Also, we're seeing traded about 5.8 million share. Here you can see that relatively low volume. I tell you that market is waiting for a trigger, and I tell you this trigger is what we put in the market. But you can see that sellers are really sitting on the first now, because we are seeing potential that will influence the market. For that, there's no cause for alarm in the market. But before we go into the live chart, which is very, very important, we want to look at the result that came this morning to the market. Intransact and Chams are already in the same payment processing company or payment service company in terms of e-payment. But I'll tell you, there's a report in the market today that about 90% increase in what in payment, online payment, and this has impacted most of these payment companies' performance, and which e-transact is not left behind. You can see the number that came from from Champs. For me, for those that are in Champs for medium and long term, don't need to panic. If that number continue, you want to see a better earnings that also impact the price. And don't forget that price feed on earnings. And if earnings continue and we are seeing changes in the market, liquidity continue to improve, these are stocks that you need to, because of their performance. As we speak, looking at the number that came from e-transact, this is a very impressive number. Looking at the financial ratios and also all these metrics, it tells you what is happening in the company. You look at the revenue for e-transact, it moved from 11.62 billion to 17.38 billion. That's about 50% up in the green compared to the company performance last 6 months. In 2000 and compared to in 2002 performance. This first 6 months of this year, this is what the company has done: 17.38 billion, and this translates to what 1.02 billion at the end of June 30th, 2023. And this also translates to what an earning per share of around 11 kobo or 20. That is that it's still poor, but they are coming from somewhere. This is a company that we have not heard from the company activities. Because that since technologies started coming back, payment system has improved due to trying to encourage online banking. We have seen this, and also it's a company that also have stretched out business activity to partner with some state government. I believe that this also going to be because most of the government are going e-government that we're seeing here and there, and that has a way of influencing this payment platform. I tell you, this stock and that of charm for those that understand the power of payment and also the facility they use. It's not what they do every day. I believe that this company will not be importing goods with dollars and also be posting a high cost of operation, or let us say major thing. I want to do one-off thing. I see it's for those that are thinking long and medium, it's a place also to be looking at. Yes, the earning might not be too attractive, but if they continue with this space, with this earning, with this performance, in nearest future we'll see a better earning also that will support the price. But I tell you, the shareholding structure of this company has also supported it. Even what we're seeing in the life of Boa and that of Dangote or the Nestle before now, and then that of Steplat, almost the same thing. Because I speak now, about 86% of this company's share is already in institutional investors, and these ones are not ready to sell. These are the people that are holding to see because they have interest in the company. For me, if you are there, also don't panic out. Let this number continue to guide you. And for those that are not there, it's an opportunity to start by because if this company sustains now, because the share, outside the float is not much, you might not see the price going down, but rather to be moving in the northward direction. So that PAT moved from 408.83 million to 1.02 billion. That's about 145.08% in the green. And if you look at the profit margin, yes, it's relatively low, but an improvement from profit margin from 3.53% in 2022 to 5.87. This is almost like 100% increase, but still below what 10%. Like I said, with time, as they're coming this momentum, they're likely to become a company that is natural. But also the good thing is that this is a company that also have investment. If you look at the company result, if the investment income also grew for this period, it is that a company that also has its own business, also investing, send its money and earn to earn more. This is a place also we're looking at to know that they have business grant that are going to support the numbers. I believe that we should also consider this when we are taking a work decision. If you look at the company on operating cash flow, operating cash flow improved significantly. If you look at the company negative position about 1.54 billion as at December 2022 to a sharp positive position of 3.17 billion as at the end of the half year. For me, it's a good improvement that investors should also consider, knowing that in the sector where they are, they don't need to import anything that will say they are spending much on what on dollars. Like where dollars continue to vaccinate, continue to oscillate. We have to also be careful where we're putting our money. And when I say that, it's time to look the way of what of the service sector. These are the blades you should also be looking at. They align your portfolio to this service sector, banking, airline, improve numbers in different sector. You can see what is happening in UCAP. Also, you can see number that came from Charm and this is that it should also guide you what you should be doing in the market as we speak now. Yes, because of our time, quickly come to the chart. Look at what is happening in this chart now. One thing you can see that where is the chart going? The chart is still going northward. You can see that yes, it's making higher high now. You can see it now, but all eyes on this tops 1 and 2. Once market get here and pull back, that means what is unable to break the resistance. This is the resistance we always say, and this also like the support. Also, you can see that the market are remain in this. Let me draw this so that you can see. This is the top we're looking at, the strong top. What we say now, you can see it here. For the market, you can see the top there. Then also, if I take the line here, and see it also from here. This is another first support level. Can see this is another strong support level, first one. Put that one there. Then you can also come here, see this is another strong support level. You can see this support level of different at different level now. You can see this is support level, this is support level, and the market is in between this in between this resistance level and the support level. And the market is trading in between this rectangle here now. You can see it from here to here, but a breakout of this line will usher us a new uptrend that will send the market to be talking about almost a 17 years high. Can be looking at it, but you can see that the numbers or the factors that brought the market to this level are also very, very much intact. And also the kind of liquidity that I've seen is different from the liquidity that we saw in 2008 and 2007. But you can see that now what the market is going stable because of all high price stock that have been also been listed all this while, and they have been consistent, and performance has also been made despite the Q2 number. We're seeing a good earnings that have brought the market to this level before this recent to what this performance we saw in the numbers. But I believe that the way it's going is a good trend that you should look at. See, once market is able to break it, that goes a new trend, and the possibility is very high. Any correction again until break down this one, I want to say the market has continued also in a downtrend. But let's keep our finger crossed as the market is. For our time, let's quickly call our indicators. Let's quickly call them now up. Let's call indicators up for quick analysis before we finally time, because in this kind of situation we also like look at the chart of each transact which we will be doing tomorrow, and also look at the resistance level of each transact, the support level of each transact. We'll do all that tomorrow, hopefully by God's grace. But it's good to know all this so that when you are doing your analysis, it will help you to know exactly what to do at any given time. And if you look at the the T line now, to speak, market is still very much above what above the T line. Yes, you might say not much, but I'll tell you since it's above the line, so that this trend we're seeing, this momentum is also positive as to speak. You can see where it is now and still going uptrend. For me, there's no cause for alarm, and this for a day. We can look at what the market look at, it's looking like in 1 hour time frame. On 1 hour frame, you can see that it's flat on the T line as you can see it here, and also we can see that MACD is also slightly bullish on the 1 hour chart, and money flow is looking up here. Compared to what we saw yesterday, this one can see that market is already looking up to read 80 what 84. You can see that it's a consistent improvement on the chart for what on the 1 hour chart. We quickly look at what 15 minutes chart is very, very important. And before we look at other stuff, before on 15 minutes chart, yes, you can see that still very flat on the T line, but MACD is slightly bearish. You can see that money flow is looking down to read around what 60 what 64. This is not a totally bad market for me. It's a good one. I don't need to panic much. Rather, to take advantage of what the market is doing. Also, to buy into a good company and wait to see where the market will move from here. We quickly look at what is happening in Me and Baker. So Me and Baker are among the top gainers yesterday. This morning, we're still seeing Me and Baker in the train this morning. Let's look at what is happening there. Me and Baker. How long will this company go with this performance? If you look at 15 minutes chart for Me and Baker, good position. You can see the candlestick here. For me, it's a good one. There's no cause for alarm. MACD is very, very sharp. You can see it's a bullish. Money flow is already reading 87, and you can see the trend here. Still remain above that. For me, it's a good one for Me and Baker. Let's look at the 1 hour chart. 1 hour chart, you can see, and MACD is, you can see that this histogram is on the upside, and it's also accelerating from here to here. You can see and money flow is still looking up on this stock. For me, it's a good one. There's no cause for alarm for this stock. And this also we're seeing a social formation in terms of candle, and this is strong resistance level. Once market break it out, the length you see it here, or the length we're going to repeat in the upside, depending on what on the market sentiment. We're seeing a better fundamental in terms of earnings from this company. I'm not surprised seeing this stock looking up like this, and I know that it's going places. Also, if the company can improve their payment, their payout at the end of the day. We quickly look at this one that has been the talk of the day in the market. Look at what is happening to Glasgow Smith. Let's see what is happening there. And how investors also reacting to that result there. We need to look at it very well as investor. What are we gaining from this company that that investors have been waiting to see where they are going from here. We want to know what is really happening there right away. That will help investors to know exactly what to do at this moment. Let's look at, for me, for those that are already in this stock, I've said earlier, you need to also hold, but for those that want to buy, have to play with caution. Yes, on the 1 hour chart, you can see that there's gap up here. You can see the gap up the way it's going above the T line, and they were seeing the MACD is very, very strong, and they can see more on this on just the 1 hour chart. If you look at what is happening in 15 minutes chart on the stock, very, very strong. We see also stock jumping up, and but if you look at the MACD now, on a 15-minute chart, you can see that we're seeing the deceleration of the acceleration of the histogram now coming down, and you can see where it is. Money flow is always down. But let's look at a day chart on the stock to really get the position. You can see this what called three soldiers in technical analysis. You can see that they're almost the same length of candlestick. It's a bullish candlestick, very strong. But for those that want to buy, because at this level, the reversal is very important, and reversal is very, is obvious here if depending on where. But now, because it's not moving on the strength of either fundamental but strength of sentiment of exiting, you that want to jump, you don't know where it will jump and information will come, and it is below the market price. You need to adjust. You need to adjust down. That means you have to be very careful so that you don't go and buy at the end of the day what they're paying out is lower than the price. And like I said, those that are there, you have to also watch and see and play with caution. And also, if you look at money flow this hour now on the day chart, it's already slowing down. Not looking of almost covering. It's a sign. Yes, we're seeing a sharp pull here in MACD, the way it's accelerating, but play with caution in this regard. On this note, I will say thank you and see you tomorrow. We'll continue from here. Tomorrow, we're looking at the chart of of e-transact, and look at all the time frame and the support resistance for e-transact, and how far will it go from here after the results we have seen, and what likely to also to support the price between now and what and the Q3. And also full year is very important that we know all this. On this note, I'll say thank you and see you tomorrow. Enjoy social trading. Bye.